We talked about the buy at 44.50s. This is the RGL price, of course. This is this price here. That's the 44.50s. But take a look at where the other price that we gave you, the 44.80, 4.85 level. See that? 44.80, 4.85. Does everybody recognize the price that rejected the high print? Is that not incredible? So when you see that, you're starting to think to yourself, wait a second, that's 30 points in the way up and 30 points in the way down. That's a $3,000 round turn, isn't it? $3,000 round turn off the RGL. The battleground, which was in the middle of the 68s here, and then up to the 84s for the sell-off, back down to the RGL again at 44.50s again, back to the RGL. So when we look into that area, when we start looking into that area, that's what we start paying attention to, isn't it? Is we start paying attention to the fact that this is going to be of interest to us. Our job is to try and figure out when it becomes interesting, how it becomes interesting, why it becomes interesting. Guess what? At that very top edge price, what happened? It was a cash open, right? What do we do at the cash open? What do? We start looking into those areas and we start asking those questions. Well, where are we going to see the trade? Where are we going to do some business up here? What's going to happen? You start looking around those cash open areas for trapped buyers getting jammed into a price, for the rejection of higher prices and the toxic order flow coming away from those prices. Did we get that from the cash open guys? Did we get that from the storyline? I think we did. I think we did. I think we got exactly that process when we think about it. Does everybody remember the classroom we did this morning about getting jammed into certain prices at certain points? This was the cash open. What do you recognize? What do you recognize from the cash open? Do you remember this conversation we had this morning? The slow build, the sweep, the absorption and rejection, the toxic reversal gives us a knowledge of intent, right? The narrative that comes from that is that there's a commercial reversal at the 2 point. Liquidity providers recognize a commercial at 2 and pull, which gives you a toxic candle at 3. Well, if we understand that from this morning, does everybody recognize what went on? Does everybody recognize a similar type process? For example, if I now draw a box around this opening cash open here, what is this point here? Would you all agree with me that this is the one? This is the one in that storyline. Would you all agree that if that's the one at the storyline, would you all agree that that break higher there is the 2 at the storyline? This is the sweep. This is the 2. If that's the 2 of the storyline, would you all agree that this candle here is the 3? Because there seems to be some sort of toxic order flow pouring into this as a storyline going forward. You see that 3? That's a toxic candle, isn't it? If that's a toxic candle, what did we say you should do? And what we said you should do is we said that you should take that area and start looking at it as a possible sell opportunity, shouldn't we? And therefore, when we get that opportunity, sometimes it never goes back up here. You'd have been watching for greens getting jammed. Well, you don't get the greens getting jammed until here. So there's your selling opportunities there. And then that's you. You've got a $1,500 profit on that sell trade. Is that not exactly the same? Now, bearing in mind that this location here, that we've just analyzed here is this price here. Yes? So this activity that we're seeing developing in this area here is right there where we've got that liquidity, that confluence of stuff going on in the background. So the question is this the same? The question is this the same, for example, as this top edge that we showed you this morning? for example, here. Is this the same as this? 1, the kind of accumulation balance area. The same as 1, the accumulation balance area, which is a higher high and a lower, sorry, a high and a low, basically just a balance area regardless of which side. 2 is the sweep getting absorbed. The sweep is any break higher or any break lower getting absorbed and reversing back inside value. That's the 2 point, right? And 3 is the commercial activity, the candle that goes away from that area, the commercial fast money activity. So this must be the 3 candle right here. The fast money activity away from that area, telling us that this area is now very definitely a kind of toxic looking top edge, which happens to tie in perfectly with that big level we've just been discussing. So when we get that low volume retest, your opportunity is now to take advantage of that and make a lot of monies. It's crazy, isn't it, when you think about it? Exactly as we tweeted and then acted out on the right-hand edge of your charts at the cash open.